Hey guys, in this video I'd like to talk about why we should start investing as soon as possible in our lives. Before we get started, please keep in mind that I'm not a financial advisor and nothing I say in this video should be taken as financial advice, and please invest at your own risk. With that being said, I'm just a guy in my early 20s and let me tell you a little bit about what I do. So right now I own a trading company based in London and I absolutely do love my job. But in 2020, with the pandemic, we have seen stuff that we haven't seen before. And this should have made us realize that only having one stream of income, no matter how good and how stable and how reliable it is, it should not be considered safe. Jobs and business can go away just like that. So I believe the best way for us to move forward is to invest a small portion or a large portion, depending on how you decide to go about it, and invest it in the stock market, in dividend-paying companies for a better financial future. With that being said, let's get started. So, during our school years, I remember learning about biology, math, history, chemistry in detail, but I never learned about investing. And I learned about the past quite extensively, but never about the future. Why is that? I believe the reason has to do with us being retail investors. Basically, before trading apps like Robinhood, Webull, Trading 212 came along, the fees and the commissions and the interfaces for those investment apps was quite hideous, unfortunately. But with these apps coming through in the market, it's become much easier for us to start investing. And honestly, we can start investing with as little as $1, pound in my case. In this YouTube channel, I plan on talking about different types of investings, different stocks, different ways in the future. For the time being, I just want to touch the basics and explain why we should start investing. Now, I believe there are three different types of investings. The first one is real estate, the second one is the stock market, and the third one is probably cryptocurrency. Now, the first kind, real estate, is something that I won't be talking about just now, as it requires a large capital to start with. The second one, stock market, is actually much easier to get into. When you buy a share from a company, you technically become a shareholder and you technically own a very small percentage of that company. As that company does better in the future, that stock price, that share you own becomes much more valuable. And some companies also pays a dividend to their shareholders. A dividend is basically a company paying you because you own a share. Of course, how much you get paid is going to depend on how much you have invested, but I'd like to give you a personal example. Personally, I love real estate, and I believe that in the long run, it's going to provide me with a sustainable growth and a steady stream of income. But I don't have the capital to go out and buy different properties to rent them out. So I decided to invest in REITs. A REIT is a real estate investment trust. And my favorite one right now is a company called Realty Income, ticker symbol O. These guys own more than 6,500 locations or properties in 49 states and the UK. After researching this company extensively, I've decided to invest in this company. I have an average cost of around $60 per share, making my position worth around $51,000. Now, Realty Income differs from other companies because they pay their dividends monthly. So therefore I get a steady stream of income, which is amazing. The current dividend per share is around 24 cents per month. So if I were to hold a stock and reinvest all those dividends back into the company with an average growth of 8% and an annual dividend increase of 4%, in 10 years that $51,000 initial investment would be roughly worth around $165,000, and I would have around 1,270 shares. Realty Income usually increases their dividend payout by 4% per year, so in about 10 years their dividends should be around 35 cents per month. Per share, of course. So if at that point I decided not to invest those dividends anymore, I would be getting paid around $450 per month for doing absolutely nothing. But let's say that I decided to hold up for 20 years instead of 10. What would happen then? So if I held up for 20 years, my position would be worth around $450,000 with roughly 1,600 shares. With an annual dividend increase of 4%, the dividend per month in 20 years per share should be around 51 cents. So my $50,000 investment at the age of 23 would be returning me about $450,000 by the age of 43 and paying me about $9,800 per year in dividends. Now, this is why I think that we should start investing as early as possible. I thought to myself, do I really need that new car? Do I really need all those luxuries? I mean, I don't. I do, but I would love to be more financially, independent 10, 15, 20 years from now instead of having those things right now. Because so let's say that I'd not really go out and spend that $50,000 on that new car, whereas I put it over here. So in about 20 years, that's going to be $500,000 for me, which is quite amazing. These are if things go right, of course. I mean, the things can take a very, very bad turn as well, but here's to hoping for the best. So, guys, this is probably my first English video on YouTube. So thank you for watching. And as I said, I'm not a financial advisor, and I know that there are, guys who really go into detail about these stuff, but I just wanted to share with you the things I've learned and why I started investing in the first place as a 23-year-old. So yeah, thank you. Cheers, guys.